quite simple, Mahesh. I think because when you walk on the right path, you're almost guaranteed to let go of some short-term gains or some short-term pleasure. Hello, everyone, and welcome to our channel, The Mutual Fund Guys, where we only speak about mutual funds. I'm Samir, and across Mahesh, and Mahesh and I are partners at AMS Investments, which is a mutual fund distribution company based out of Mumbai. Today's episode and today's video, I'm very excited about. Today's video topic is the difficulty of being good. It's something that I have struggled with personally, and I'm sure Mahesh, you must have struggled with it as well in many aspects of our lives. And I'm sure almost everyone watching this has struggled with the difficulty of being good, or rather, I would say the difficulty of being consistent with anything in our lives, right? So let's dive straight into what I mean by the difficulty of being good, right? Let me explain to you by giving an example. For example, we all know that in order to sort of have a healthy life, a long life, you need to eat well, have a good diet, and you need to exercise regularly. I think we all know this. We know that there is a path to good health and longevity, and this is a path, if you follow, you will reach that success, in terms of your health, right? We all know that this is possible, but you will also recognize that there are umpteen number of people on this planet who are unfit, who are either very obese, or are physically unable to do a lot of things that they were able to do many years ago, but they can't do anymore. Everyone knows the right thing to do. So the path is quite known. As you grow older in life, the path is quite clear. I mean, there's not much debate on that path. Okay, and we all know if we walk this path, or we walk this sort of path, we will achieve success.
Yeah, we'll achieve the goal.
Yeah,
that we have set out.
So why is it that we don't really, walk that path? What is the reason why we are not able to walk that path diligently, consistently over long periods of time? And the real issue actually is the difference between knowing what that path is and being able to walk that path. Okay. I mean, in fact, this very sentence that I just mentioned, knowing the path versus walking the path is a very popular sentence or a dialogue used in some of the most iconic movies that we've watched, right? And let's play one of those video clips to show exactly what we mean, right?
Do you believe it now, Trinity?
Morpheus. The Oracle. She told me
She told you exactly what you needed to hear. That's all. Neo, sooner or later you're going to realize, just as I did, there's a difference between knowing the path and walking the path.
Now, I have come to the crossroads in my life. I always knew what the right path was. Without exception, I knew, but I never took it. You know why? It was too damn hard.
So in both these movies, both actors, right, clearly recognize that there is a right path or a path towards fulfillment, but it is very difficult to walk that path. And as Al Pacino would say it is too goddamn hard to do it. So the question is, why is it so hard to follow that path over a long period of time? And why is it so difficult to be consistent? And the answer is actually quite simple, Mahesh. I think because when you walk on the right path, you're almost guaranteed to let go of some short-term gains or some short-term pleasure or some short-term sort of adrenaline rush that you seek to get, right?
For example, I'm overweight, right? I have at
You're
least
not
12
overweight.
kgs more than I should be having. And I know the path, eat in moderation and work out on a regular basis. This is the path. It has to be done consistently. That's it. The problem is that to do these things, I have to give up on the short-term pleasure of being able to eat what I want to eat, maybe drink a little, all that I have, that short-term pleasure I have to be willing to give up for a potential long-term gain. I mean, the gain is in the future, right?
Yeah.
Whatever happens, long health, etc., is all in the future. At this moment, I am giving up a lot of pleasure, and that is the problem.
And I think one of the reasons why this is something I'm adding here is you don't really, you cannot envision the future. I mean, for
Yeah.
example, sitting here, for example, I am, in my 40s. If I continue to eat badly, or if I smoke or drink, I will not be able to understand the repercussions at 65, 70, right?
Yeah.
As I get older. But I know, I mean, I also cannot understand the repercussions of me being really fit at 65, 70.
Yeah.
What if I really eat healthy now and I don't indulge in any, hazardous things such as smoking and drinking? I can't even envision I would look like at 65, or what I would feel like at 65. Will I be able to hold my grandkids or go on vacations, or be able to even lift a bag of groceries? I don't know. I can't envision that. Now, how does all of this relate to investing? I mean, let's just break it down and figure out what all this means for investing. What does it all mean for long-term investing? So we've always on this channel and have said that long-term investing is the part to be on. And there are various benefits of letting your money compound year over year over year over
Yeah.
year.
And that too, long-term investing in equity or in hybrid funds. It
Yes.
is a part of the investment, at least a part of the investment.
Yes,
So we
Because
want that to be done for the long term. That's
long
very
term.
clear.
Because of the benefits that equity beats inflation, and that is what we want to do. So there is very little, in fact, there is really no debate over the benefits of long-term investing. Every single person who has been successful in this business, such as Warren Buffett or Rakesh Jhunjhunwala, they have been long-term holders and investors in stock markets, right? There is a lot of temptation, which is where we sway away from the path. The
Yeah.
temptation is to either trade, okay? There is a temptation to sort of book profits early, to buy before budget, after budget, before election, after election.
And
These
also
are
the
all
temptation of just not taking any pain of this volatility, right? So
Yes.
the main problem that people face is that they don't want to invest in equities, or not at least a large extent, because they don't like the volatility. So they say, let's put it into an FD where you are guaranteed the short-term pleasure of seeing your money safe and get a certain return, right? But
Correct.
without realizing that in the long run, that is guaranteed
Not
to
going
make
to
you
give
fail
you.
in that game
That's
of
right.
investing, right?
And the path, let's talk about the path again, right? 99%, this is actual data, right? This is no made up. 90% or 99%, I believe, of traders don't end up making wealth over the long period
Yeah.
of time. But 99%, I would believe, of investors who invest for long periods of time, 20, 25, 30 years, will make money.
100%.
So the path is clear to us. The path is long-term, okay?
Yeah.
10, 15 years, consistent. Don't stray away from that path.
Yeah.
Okay. You will achieve those results that you want
Correct.
from your life, right? This is
Buy
the most
into the right schemes.
by the right schemes
Yeah,
and
buy
hold
the
on. I
right
mean,
schemes. And if you are a little risk averse, buy more of balanced advantage funds, but and less of equity, whatever helps you stick to
helps
that
you.
path,
Yeah.
right?
That path, you decide what your path is, but at least stick to the process of that path, right? That you have to be on this on a very,
Yeah.
very, very, it's very boring. I
Yeah.
must admit, it's a very boring journey, but it is not supposed to be exciting. It is not, this is not a roller coaster that you're going
Yeah.
on.
That even I have lived through these 28 years, right? I was there in the market. I had the money to invest that 10,000 rupees,
Amount.
whatever amount that they talked about, but I never did.
Yeah.
I never did. It is the temptation of the short
Yeah.
term.
But to your credit also, Mahesh, I'll be honest with you, to our credit, let's say, we probably at that time didn't know the path also.
Yeah,
Okay.
we didn't know the path. Yeah,
Yeah,
it
we
is,
didn't know the
it's
path.
not that we knew the path and
Path.
we are only saying that we didn't walk it. We didn't
Exactly.
really know it at
Know
that
it.
time. Yeah.
I think the equity culture 28 years back in India was still quite nascent.
Yeah.
It was not as evolved it is as it's now. So I think now that we know the path, now there's enough data
Yeah.
from India as well as other countries like the US and stuff, where the data and the path is clear. If you stick to the path, you will be successful. That's it. There's no debate on this. Okay. So, I mean, this was the whole point of today's
Yeah.
video. There's not much
Can I
numbers.
just summarize
sure.
what we
Yeah,
just discussed, right? So,
Yeah.
I mean, as far as I understood, what we are saying is that the difficulty of being good is that there is a difference between knowing the path and walking the path. And
Yes.
why is that difficult, knowing the path and walking the path? Why is it difficult to walk that path? And the answer, I think, is what you're saying is that it might be simple, the path might be simple, but it is not easy. And why is it not easy? Because it almost always involves giving up some short-term pleasure, right? There is this short-term pain of seeing volatility in the markets when you're investing in equities. And there is also giving up of the short-term pleasure of having a fixed return coming in through FDs or debt instruments when you're investing in them. And you
Yes.
have to be giving up that pleasure, taking on short-term pain in order to get a potentially large but uncertain long-term gain. And that creates the difficulty, I think. The way this trade-off is very difficult for people.
There's a short-term pleasure, at least a perceived pleasure from the investor's point of view that, "Arey, let's sell today, we'll buy back later." And it might work out for maybe one instance or
Yeah.
maybe two instances, right? But that repetition of that instance again and again is very unlikely, which means
Yeah.
that you might get it once or twice and you get that short-term spike of good feeling, oh, I know everything and I'm sort of time the
Yeah.
market perfectly. But you probably lost out on long-term gains if you kept doing this over and over again.
And also, every time you take a call, like let's say somebody decides that we want to sell now because the market is at a high. Okay, but it requires you to buy back at a lower price for that decision to be right. A lot of
Right.
people get one of the decision right? That is selling
Sell
at
at the
some
right time,
time.
but they don't
But
be
they
able to.
never buy back because then they always expect it will fall more. And then inevitably, I have seen them buying back only at a new high.
Yes.
So
Yeah.
it doesn't make any difference whether you sold or not. It's far easier to just trust the process.
And one thing is also the attitude towards of the investor, right? I mean, this is not a game. Okay, this is the process. This is not a
Yeah.
game that you're looking to time and buy and sell. You're not trying to play a Nintendo game or some kind of a game, right? This is the process. The process itself is the path. Or the path. The process of investing diligently and keeping in and being invested for long periods of time. That is the path and the process. So, in my opinion, the path is the process of being sort of consistent with your investments every month, as well as being invested for a long period. The other parts of investing, which we are talking about, trading as well as buying and selling and getting in and getting out, this is really not part of the path. This is completely, a different alley next to the path, but it's not the path.
Yeah, that
So,
is not
anyways,
investing. That's not wealth.
that's right. So, anyways, I hope we all enjoyed this video. I definitely enjoyed it. Brought back some memories of the mistakes I have done in the past. And I hope that these mistakes are not repeated by you or our clients. So thank you for watching. Thank you for watching and see you next time.
Bye.